What's going on, guys? Jay here. I am back from the summer vacation and I do apologize for not being around a lot, especially on YouTube. I am not a YouTuber, I'm a trader that takes vacations while the markets are absolute garbage. But it wasn't so bad this year and I'm going to go through the stats with you. But the reason why I want to make this video for you guys today is because it gave me a bit of time to reflect. I was able to kind of put something together to help you guys go and use the model that we're trading with in a 100% mechanical way so that we're eliminating the guesswork, and especially around the break of structure part, which has been kind of the area of debate with the strategy that we're using and that we're having success. So hopefully with the small tweaks and changes that I'm showing you today, you'll be able to grab this new trading view indicator and add it to the ones that you currently have to be able to more successfully see the break of structures and enter into your trades more confidently. So let's get right into it. Before we jump into the video, I wanted to show you guys the stats from this summer. So right now you have a screenshot of the spreadsheet that you can find on my website directly in resources and tools. And if we look for the total of August, we have a lot less trades that we're normally used to having. And then we have the hit rate, which is a bit lower than what we're expecting as well. But I mean, for a summer month, 9R is really good. And then if we go to July, again, kind of same level of activity. We have a 10R month with the 1-to-1, 8R with 1-to-2, and the banger with 16R on the 1-to-3. The TGIF has been working really well. If you haven't seen that video, I'm linking it up top now. But on a Friday, if the movement of the week has been unidirectional, this is a killer confluence to the strategy that we're using. So remember, we're not trading the silver bullet setup. We're not trading the TGIF setup. I'm trading the Nexus blast concept, but I'm incorporating confluences, which are the silver bullet and the TGIF, to help solidify the trade idea. If we recap what the Nexus Blast strategy is, you can find this video on my channel as well, and I'm going to link this up top now, so make sure that you go look at that after this video. But essentially, the Nexus Blast strategy is that in the morning session between 8 and 1, what we are looking for is a raid of one of the two London liquidity pools. So if we're raiding the London buy side, then we are looking at a reversal, which includes a break of structure with displacement. And the way to identify that in mechanical terms is that a break of structure is a break of a swing low on the current time frame that you're looking at. So before, we didn't have these little arrows here. These are called fractals. And the indicator that I'm using for this is called Fractals by Rachel T. And these are the default settings. I only changed the color of the arrows. What this helps to do is to help you guys visualize the swing highs and lows of the market. So if we didn't have this, your mind would mentally have to do something like this, right? Oh, see, it's not perfect, but it will help you guys, I promise. All right. So this is the structure that we're seeing, and I think everybody could agree with this. So we see that the market was lower. It moved its way up like a staircase to reach the London buy-side liquidity pool, and then it started going back down. So if you don't want to be drawing this or looking at your chart and trying to make a mental picture of what's going on with the market, you have these little swing high and swing low indicators that help you visualize the structure a bit better. So what are we looking at? We have our raid over here. Then we're looking for a break of structure / aka market structure shift. So in this example here, if we take this low and we drag it across, this would be the level that I would like to see the market start accelerating through and going in the opposing liquidity pool from the London buy side. So our conditions are met. We have a raid. We have this structure here that is being broken by a candle body, very important. And we can see that we have displacement through this move, and this is the fair value gap that was mitigated, but we did have the fair value gap form between this candle and this one. So our trade setup would be like this, or you could go a bit higher if you're not super confident, but let's just keep it at the nearest level. So this is the swing right before the first candle created displacement, and then the structure was broken over here, and we would try to aim for the new week or the previous week opening gap, and you would take partials at some of these key levels here. So these are also a good indicator about where you can take partials, because under these swings is where the liquidity is residing. So it's also going to give you a little cue on perhaps where you should take these partials. And I believe you can add alerts on these, but I mean, it's not very complicated to just add alerts on these key levels and then slowly make your way out of the position, making sure that you're grabbing everything along the way, or partials along the way. So this, guys, is going to eliminate, especially for the beginners, a lot of the guesswork about where is that break of structure. If we don't have the fractal indicators, you're kind of stuck with this. So as a beginner, and even as an intermediate or advanced trader, I mean, you still have to do the mental work of trying to identify where those swings are and which structure do you want to see broken before you actually enter the trade. By incorporating this to your method or to your strategy, you have a mechanical way to say, okay, a raid is easy. I can set an alert right here, and then I sit on my hands until this happens. If you're coming to your computer and the market's over here, you're waiting for this to happen or for this to get broken. So add an alert there. There's no way you can mess this up. Then, with the fractal indicator, you start looking at where does the structure need to be broken in order for me to be confident that the market is reversing and going in the other direction. So these little arrows are going to help you visualize that. And you can say, I'm sitting on my hands until this specific level gets broken. So again, you annotate your chart and you say, I'm not doing anything until this level triggers an alert. So you would have an alert over here. Then you would come to your computer, and this is 12:30 now. So for the silver bullet hour on this day, the setup didn't occur. But our strategy says that you're allowed to take a setup anytime between 8 o'clock and 3 p.m. But after 1 p.m., you're supposed to be looking at the previous session liquidity, which is the New York AM. So yeah, once this alert is triggered, then you look for a fair value gap, a closed fair value gap that was created by 3 candles. And this is what we have here: candle 1, candle 2, candle 3, fair value gap. So our conditions are met. 100% of our conditions of entry in this situation are met. We have a raid, we have a break of structure, and we have a candle body that is crossing the break of structure level with speed. So this is exactly what we're looking at. We're looking at the liquidity to be rated. We're looking at the market reversing, which is the break of structure, and we want to see it accelerate through that break of structure so that it's not consolidating and giving it a chance to kick you out. So we have raid, market shift, acceleration. These are the 3 indicators that you need in order to have a successful entry and get a chance at grabbing part or all of the opposing liquidity. So if you don't know where these market structure shifts are occurring and you want a 100% mechanical model, this is the way to go. And guys, my trading improved greatly when I was able to remove myself from the equation of trading. And in this situation, if you have 3 criteria that are 100% mechanical that you're looking at, You've seen the stats. You know there's an edge to this strategy. Just let it play out over time. If those three things occur, you enter the trade and you don't do anything until you hit the 1-to-1 mark. This is going to help you improve your confidence in trading because you're no longer to blame on a bad analysis. Right now, you're analyzing where you think the breakup structure should be. But if you have this indicator and you follow it, you won't have to blame yourself in the event that you get stopped out on one of these trades. Over time, if you do this on 20 trades, you're going to see that you have a positive R outcome. So give it a shot, and I promise you won't be disappointed. If you've seen this strategy work out for you and you have the confidence to go for a bit more capital, on my website there is a section called Get Funded with the Funded Trader that has all of the comparisons between each of the different challenges that you can take with them. And with the recent news on my Forex funds, if you're going for a challenge, try to go with a firm that doesn't have their own broker that uses third-party brokerage for these challenges. And in this case, at the Funded Trader, we have 8Cap, that is the broker behind these transactions. So if you're looking for an additional discount code, you can use code NEXUSBLAST at checkout or click directly on the page here on the website to get your additional discount. I hope this video was helpful for you guys. If you enjoyed it, please leave it a thumbs up and subscribe to the channel for more content like this in the near future. Thanks and have a great day.